Welcome back to the latest edition of Fun Friday with a very special and distinguished guest, Dasha Beardsley.
Thank
Once
you.
again, I'm your host, Craig McGrother, the Director of Business Development, alongside an in-house guest here, the first in-house guest for Fun Friday, the Director of Investor Relations, someone who's been with the company for a very long time, someone who has known Rob Beardsley, the founder, for a very long time as well. I think some would say her whole life. Is that correct?
Yep.
Welcome to the show.
Thank you. Excited to be the first guest on Fun Fridays.
Well, from Lone Star, that is, because this is a
Right,
couple
right.
episodes deep, of course, but here we are today. And we actually are kind of thinking about this from a strategic perspective here, not to puff ourselves up, but to further break out and explain, how one could work with us and partner with us in reference to raising equity in our opportunities, what it looks like from the back end perspective, so you can kind of see behind the curtain. So I think that'd be really important to break out. So Dasha, you've been with Lone Star Capital for some time. Can you give us a background maybe about your origins with the firm, how long you've been here, your current role, and all that jazz, please?
Yeah, absolutely. So I've been officially full-time with the firm since August of 2022, and I was part-time for quite some time before that, maybe about a year and a half before August of 2022. So as far as my role, I'm the director of investor relations, and then I also oversee our marketing efforts, specifically as it kind of pertains to investor relations and acquiring new investors. And as it pertains to this particular episode, I oversee our co-GP, capital raisers, and fund of funds. So I'd like to bring my perspective as far as how that differs with investor relations specifically.
Absolutely. And how have your roles evolved at Lone Star? Because I know pretty intimately that you kind of have worn many hats throughout your process here. You've done a lot of things. You kind of know the ins and outs of kind of what I was doing because you and Rob were kind of splitting what I was doing before in reference to the capital stack with the outreach and stuff. So you've kind of worn that hat. You wore the events hat, and then now you're on the IR side, the onboarding side. But can you kind of talk about maybe the various roles you've had throughout your tenure here at the firm?
Yeah, I would say actually they've definitely evolved, but they haven't changed. So I started with marketing, and that was, literally me editing the videos and doing all of the nitty-gritty as it pertains to social media marketing and things like that. And now I have help. So I oversee marketing more so. Also, kind of the second step after marketing was working with our co-GPs and kind of getting their investors into our deals and doing more of the investor services type of investor relations. So like onboarding and doing the documents. So I still do that, but now I also have help with that. So yeah, basically, and I also still do the events, but now I'm just kind of more supported. So I start and kind of do actually do the thing, and now I'm kind of doing more overseeing of processes, but still heavily involved in all of those things.
Yeah, and you do kind of wear many hats. And I think one thing you're really excited about is that we're getting an office assistant, an executive assistant, if you will. Is
Yes,
that correct?
executive assistant. Yeah.
Exactly. So what will that take off your plate now? Because naturally for the events that we do and just little things, you kind of get shoved some of those duties one way or another. So are you excited to kind of have that get off your plate as well? And then also, are you typically speaking involved in the hiring process for, many of the positions here too?
Yeah, so I also, what I didn't mention, I oversee the hiring processes, or I just do the kind of front end of it. So I look at applications, and I also do the first round of interviews. So that role won't be kind of taken off my plate at all with this new executive assistant, but more so than things off my plate, I'm very excited about this executive assistant actually kind of giving us more capacity to do some more projects and kind of build out some more of our investor relations, do better and more thoughtful gifts and things like that. So yeah, and then also as far as the event, it'll be really nice to have someone kind of really helping me and dedicated to helping me throughout the process. Because we all want the team to be very present and not kind of running around like crazy.
You know, that sounds like I may not have to be at the event center at the One World Trade Center at 7:30 a.m. putting at miscellaneous things, sweating through my suit. Does that sound reasonable, or am I going to be sweating through my suit like I did the last couple of years as well?
Maybe. We'll see.
Perhaps, perhaps. Well, I'm still planning on it until I don't have to do that, but always happy to help you out and support you. You know, we're very much so in sync and we work in tandem together a lot. And then obviously in trio between you, Rob, and myself. So it's always fun that I get to work with someone who's, you know, more than just a colleague, but also a friend as well, which we've developed such a great relationship over the last year plus. So it's been very fun to have you on board, and you know you've welcomed me very nicely into the team, into the family business, if you will. So it's very exciting. Let's talk about the capital stack. So what we really want to get into is the difference between the co-GP route and the fund of fund structure. But with that said, can you talk about maybe the various forms of equity that go into our deals? There's 1031 exchanges, there's JV partners, there's the, you know, LPs and limited partners, which are, you know, friends and family money, you know, our personal private network, high net worth individuals, that's kind of retail equity, and then the co-GP and the fund of fund structure. But can you kind of talk about all those? And if you need me to, you know, remind you of which one you want to hit on, that'd be great. But can you talk about all those different structures and, you know, how it works with your job and how it works with us?
Yeah, so of course we have our retail equity, which is just an investor coming in directly into our LP. We have co-GPs, as specifically co-GPs that do capital raising as part of their role as a co-GP, which they have their investors come directly into our LP. So similar to our retail investors, but you know their investors that our co-GPs are bringing in are not technically our investors. So it's an important delineation that even though they're coming in straight into our LP, they are not our investor. We have fund to fund, of course, which is what we're going to be focusing on this show, which will be a fund of accumulated investors that a fund manager brings in, and then they invest together with one entity into our LP again. And then there's, of course, JV, which would also be investing into the LP, but they would also be potentially part of the manager entity and things like that. There's a lot more sort of variation with how that could be structured, just, you know, depending on the check size and the deal that's being done. And 1031 exchange, like you guys covered on, I believe, the last Capital Spotlight episode, 1031 exchange, which for all intents and purposes, very similar to investing directly into the LP, but they are actually technically an owner of the property as a tenancy in common.
Very cool. So you love the 1031, and you actually helped us land a very, very large, over $2 million one earlier this year, of course. That's not to say that that was the first one you've helped land, but can you kind of walk through the 1031 exchange process? I guess we'll start there. What that looks like on our end, what that needs to look like on the potential exchangers end. If you have, let's say, a couple $1 million of equity you're looking to transfer into our structure via the TIC, tenancy in common program, or I guess structure. Could you kind of walk through the nuances and what that needs to look like for that to be successfully navigated? Because there's so much importance in reference to the 1031 exchange process that needs to be hit in order to avoid having a big tax burden and liability.
Yeah, absolutely. So, I mean, the way that the process typically works is, of course, we start having some discussions with a potential 1031 exchange investor. And once they get to the point where they feel comfortable committing to the deal, then we want to make sure that they have the appropriate information about the deal in order to identify our property. So like it was mentioned on the previous Capital Spotlight episode of when you guys discussed 1031 exchanges, there is definitely a very important element of trust because there are 3 spots that a 1031 exchange investor can use to identify a property. So they can identify 3 properties. So of course we want to be one of them, but we would like to be the one that they actually pursue and do the exchange with. So we make sure that we give the information, which is, you know, the address, the percentage ownership that they would be exchanging into. So the percentage ownership that they would have in this property. And I think that's about it. And then after that, then we we get with the lender, we start working on our end as far as what information the lender needs about our exchanger. We just get some, like a W-9, driver's license, all the information as far as the property that they're selling. And it's, I guess, pretty simple from the exchanger's perspective. And then kind of there's more back end work on our end, just kind of creating our org chart and the tick entities and things like that.
Absolutely. What has been some of the components and ingredients of the successful 1031 exchange transactions, in your opinion? What would be useful for someone who might be looking to gear up at some point to do a 1031 exchange into our syndication or anyone's syndication? What information do you think is really important to hit on? What ducks need to be in a row, in your opinion, from the back end side, to help navigate a successful process?
Yeah, I think educating yourself on the difference between a TIC structure, tenancy in common, or a DST structure exchange, both are very popular. So you want to really figure out which one's a better fit for you. We definitely prefer TIC, but it just important to educate yourself as an investor on which one you prefer. And then I also think as far as the timeline, you want to pick a property that you obviously are excited to exchange into, but ultimately not pushing it to the last minute. You have 45 days after the sale to identify a property, and then 180 days to actually to actually acquire the new property. So it's really important to have trust in the sponsor that there won't be huge delays, so that you want to make sure that you're actually buying that property within 180 days. So you don't want to push things off, and really want to make sure that timeline is going to work out.
Yeah, and it's funny, this last year we were talking offline about this, I think actually last week, in fact, and we were saying, gosh, we really want some more 1031 exchanges coming into our deal, because on our end, it's really nice when we get a very large slug of equity into our acquisitions. But the issue has been, with a lot of transaction volume being down, that means there's less 1031 exchanges to go around, less sellers at the moment. And if you're selling right now, and probably in 2023, and maybe even the first 6 months coming up here, you're probably selling in a position where you're maybe losing some equity. So I don't really foresee 1031s being a huge component to our equity stack in transactions coming up here, although you just never know. We hope to accomplish a couple of them. Switching gears out of the 1031 exchange side of the equity stack, let's talk about the friends and family, private network, and retail investors in our deals. So what does that typical process look like? They come into our portal, Appfolio, correct? Can you kind of walk through that?
Yeah, absolutely. So the way that it usually works, and of course it's always different, but if it's one of our Lone Star retail investors directly coming into our LP, usually Craig will let me know or email me saying, hey, this person wants to come in. And so I send them a portal invitation. If they aren't already in there, send them a signature request for our subscription agreement and a W-9 to fill out. So it's really fairly simple. As far as our portal and that process, I think ours is a little bit unique in the way that funding is also done through the portal. Of course, we offer other options. We try to be as flexible as possible, as a firm in general, to kind of cater to all sorts of different investors. So you can wire, send, check, but the easiest and way that we prefer, of course, is through the portal through ACH. So yeah, that's how the process works. It's fairly simple. You just need to put in the distribution payment information as well in the portal, which sets us up to send distributions through the portal. So it's a very simple process as an LP, and not really too much to say there.
Awesome. Now let's go into co-GP and the fund-to-fund model. So these are really the 2 points we want to hit on. These are the 2 points that are, generally speaking, a massive benefit to us, and where we found a lot of equity. And it fills a really nice size. Typically speaking, this is probably that under $5 million mark, 500K to 5 million, typically speaking. But as far as co-GP and fund-to-fund, we, of course, have had, fund managers, typically speaking, come into our deals very often. However, we're kind of doubling down on that effort for many reasons. The shift in the market is definitely, making that to be a great option. There's a lot of partners that are kind of under that $1 million mark, but above that 250K mark, where it makes sense for them to come in for the fund-to-fund structure. So can you just talk about the two differences and the nuances there and how they work specifically with us?
Yeah, so I think it would be helpful to talk about the way that we have our structure for co-GPs that specifically are, bringing in capital, and then compare that to fund of fund, and then kind of talk about the pros and cons from there. So, as far as co-GP, the way that it typically works is I will have an onboarding call with one of our partners and basically come up with a number that they feel comfortable raising and committing to, then providing marketing materials. So that would be like an editable presentation that they can present to their investors, our webinar. And then also the way that we really keep track of the process of the capital raising process is through a Google Sheet. So I will provide a Google Sheet, and that way we will be supplied with their investors' information to invite them usually to our portal. So most of the time, our co-GPs have their investors come into our portal. But if they have their own and would like to use that, again, we like to be as flexible as possible. So we're definitely for that. But assuming they come in through our portal, we'll invite them. It'll be like the same process as one of our LPs, except of course, we mark their investors off not to email for fundraising, or they also just aren't. If their investors come into our portal 6 months from now and they want to check out their distributions, they're not going to be able to see our upcoming opportunities because we mark that off. So as far as that process, yeah, their investors usually just fund directly to us. So it's really kind of a similar process as far as our retail investors, our LPs, and a co-GP's LPs. Very similar process. And then we also are flexible as far as our monthly updates. We can send those out if our partner would like, our co-GP partner, or we can have them send it out. Usually that's what they opt to do because they want to kind of streamline their communications with their own investors. So even though, those investors are not ours, there's still definitely a lot of crossover. And when they're coming into our portal, it's pretty clear that we're the lead sponsor. With a fund of fund, similar process in that I still do an onboarding call, also provide marketing materials to do their marketing to their own investors and their network. However, the onboarding process is a little bit different. We have had our partners thus far usually work with TribeVest. So that's kind of when we would start that process going. They would get started on creating a bank, getting all that legal setup, bank account set up, and all that legal setup for that fund. So in that case, that fund manager would be getting their own portal and really having their own investors in their own sphere, I guess. So their investors aren't coming into our portal. They are not technically coming into our LP. The whole fund through one entity is coming into our LP. So that fund manager can provide different terms to their investors. So also if they want to have a different minimum than us, our minimum is 50,000. If a fund manager wants to anchor their investors higher at 100,000, they can do that. If they want to do 25,000, they can do that too. So there's a bit more flexibility, and it's really more so their investor. So it does affect the investor relations.
Can you talk about too, just a little bit more and kind of double down on this thought in regards to kind of the degree of separation that occurs in reference from the co-GP structure to the fund of fund structure? Because, it's my knowledge with the co-GP structure, they do come into our portal, but with the fund of fund structure, it's slightly different in nuance in the sense that they come in with one check, they do all the sorting, their bank account is separate, and then they come in with one, entity level check into our, parent document, our parent I guess, investment entity, right? So can you walk through that, please, and maybe explain kind of the benefit actually potentially that a fund manager may receive as opposed to the co-GP model from before? Not that we're ever the type of group that would steal investors. We way much more rather, have the partner that can bring us $1 million than try to, siphon off an investor that might invest 50K to 100 grand naturally, right? So it's all about, respecting the boundaries there. But can you just talk about how, the fund to fund structure actually does nicely create a degree of separation?
Yeah, absolutely. So, like you said, we definitely we in a lot of ways prefer that degree of separation because we're not in the business of trying to poach investors. We're not interested in doing that at all. So that degree of separation makes it really clear for an ongoing investor relations. If they have any portal issues, the fund manager would be dealing with that rather than us. Obviously, if a co-GP has their own portal, this is a little bit of a moot topic, but yeah, the degree of separation, the investors will never really have a doubt of who to come to when it comes to questions. It will always be the fund manager or someone on the fund manager's team. And then as far as, with co-GP, there are some benefits, of course, where it's a little bit simpler with onboarding. You don't have to create your own bank account and K1s. Luckily, there's products like TribeVest and other providers like that will separate the K1s and distribution, so it's very streamlined. So yeah, there definitely are benefits, but like in the case that we've had investors come in through a co-GP and they're like, well, how do we get in contact with you about future deals? And it kind of puts us in an uncomfortable spot because we don't want to say, oh no, you can't see our upcoming opportunities, but at the same time, we want to totally respect that boundary that we have with our partners and kind of respect that these are not our investors. So in that those types of sticky situations, communication and transparency always kind of leads the way and solves it. It's not a huge problem, but it is nice with a fund of fun. I won't ever have to deal with that situation and kind of those sticky times. So I think for a fund manager or capital raiser that's looking to really create their own brand and is committing to this for the long term, fund of fund seems like the way to go because if you're kind of testing it out, like co-GP might work better because it's less of a commitment in some ways. You don't have to continuously send out just monthly updates and things like that. But if you're going to be serious about capital raising and being in this industry, there's a lot of benefits investor relations wise for fund to fund.
And it's funny, you mentioned something that I want to hit on as well, because oftentimes there will be people who, email IR@LSCRE, which if you're a fund manager or an investor, a 1031 exchanger looking to park equity or partner with a group like us, please email IR@LSCRE.com, Dasha@LSCRE.com, or of course, Craig@LSCRE.com. There's the call to action for the show. But with that said, if you are in fact looking to raise money for deals, and if you are looking to kind of keep your investors away and have a further degree of separation and be a little bit more of a point of authority, the fund to fund structure seems to kind of offer that. And then in addition to that, there's just inevitably going to be some emails that they will receive if we have them in the co-GP structure. Not that we necessarily want to do that, and there's ways to avoid it, but it's a lot easier to have that separation via the fund to fund structure. And it's cleaner this way, as you mentioned. So I really do think that is an inherent benefit of the fund to fund structure for sure. And yeah, it's exciting there. So do you have any more points on the fund to fund structure as well?
I think as far as, we talked a little bit about the benefits to the fund manager and then a little bit touched on kind of my view working with investors. I think there, of course, there are pros and cons to both co-GP and fund of fund. With fund of fund, of course, it's cleaner, like we discussed. So I am likely going to have less of our partners, investors coming to me asking questions. We always welcome questions and want to answer it, but it does kind of, a lot of our partners don't really want us communicating directly with their investors. So when they come to us, it is, a little uncomfortable. So Of course, I always just kind of am safer than sorry. I forward any communications of our partners' investors directly to our partner and let them know what I'm responding and things like that. So transparency is always really important, kind of smooth things over in that regard. But another thing with fund to fund, if you were working with a fund manager, there's a little bit less sort of insight on my end how the raise is going. So we basically just get one check at the end, which is, definitely okay. And we welcome it. But I think communication in that regard is a little bit more important from a fund perspective rather than CoGP, because with CoGP, like I was talking about, I can see that Google Sheet. I can see exactly where their investors are. They signing? Are they even going into the portal? If
Right.
they're
Are they pacing? Are they on track? Are they off track? Are they wildly apart? And unfortunately, to these points, these last 6 months have definitely been trying and a different market environment for sure. So, kind of losing that insight is definitely a little bit scary on our end as we embark more on the fund journey. But it is, it's equally exciting. It's also nerve-wracking. But I think on our end, it's just, getting used to the transferring process from, really doubling down on the fund to fund structure is going to be very exciting for us. But there is, of course, a drawback here in there, which you kind of just mentioned.
right. And that's also something that we can mitigate with just being more on top of actively reaching out to our fund of fund managers. Like maybe we set up like a weekly thing saying, hey, where's everything at? Versus with CoGP, I can see exactly where it is every day whenever I want to check the Google Sheet. So it's definitely not detrimental, but that is also just something for us to be aware of.
And it is interesting too, because, in the fund to fund structure, it's one check at the end on funding deadline, as opposed to a slow drip of equity kind of coming in every single week while the deal process is going live, right? So it's just slightly different on our end, as I'm sure many operators, if you are an operator listening to this, can appreciate the nuance and the difference there when you're trying to raise a deal in an interesting market, when deals don't just raise themselves via 2 emails, right? With that said, can you actually talk on the onboarding process? So that's something that I defer to you. So I'm not there in these phone calls or Zooms, but can you kind of talk about what is being discussed for, a potential capital partner on that intro conversation? Because now that I'm handling, a lot of the partners and whatnot, they kind of go to me and then I defer them to you. So could you please walk me through that and also the people listening to the show?
So do you mean specifically like CoGPs and fund to fund?
Yeah, either or. Basically, if they were to wanting to work with us on a deal, maybe go through the timetable, the launch process, the onboarding process, kind of really tie it together if you don't mind.
Yeah, absolutely. So in a perfect world, of course, we want to be getting these onboarding conversations done close to our like retail launch date, like when we officially have the deal live or beforehand. But usually it's nice to do it right around that time, so we have all of the materials ready to send them, and then they can launch quickly thereafter. I just pulled up my checklist, so it is obviously a little bit of a slightly different onboarding process if it's CoGP or fund to fund. So I'll just go through CoGP first. So I go through, I ask how much is your raise amount. I guess that's going to be similar with fund to fund. I talk about whether their investors are coming in through our portal. Do they want us to be communicating with their investors as far as the monthly updates, or do they want to be doing that through them? So just kind of talking about their preferences. I get the entity that if it's CoGP that they'll be taking the GP interest in. And then I discuss kind of our process as far as the Google Sheet. I also offer creating a Google form so that they can track their investors that ties directly to a Google Sheet. So, a lot of this is kind of optional and kind of just figuring out what process is going to work specifically with us and that partner. I talk about portal. If their investors are coming in through our portal, I talk about kind of how that works. I send over portal instruction sheet. So it's, pretty simple, and that they can also send to their investors if their investors are having any issues. How we accept funding. So like I mentioned earlier, we usually have it done through the portal, but also wire, check, whatever it may be. We talk about what our LP minimum is, and then also talk about how we I ask that all of our partners, whether it be co-GP or fund of fund, if they're sending out a mass email blast to their investors, that they send it to me, as well as their webinar presentation, or if they're sending out a pre-recorded webinar, for them to send it to me just in case. So, as much as equity is the treasure in this market, we still have to have trust in our partners, and equity is not always equal. We have partners that we trust. We also like to work with new partners, and so it's really important for us to know that, like, when we have a partner, whether it be co-GP or fund of fund, they're sending out our deal to many people. We don't know how many people, and so we want to make sure that we're being represented well, and that we have some oversight over what those emails look like. So a lot of our partners, they just use our templated email for theirs, and there's usually not much there, but still, it's like, even if it's as simple as typos, like, we don't really want our, it's nice to have a second set of eyes, and we don't really want our deal and our reputation being associated with maybe some wrong information and things like that.
Right. And how much has the onboarding process kind of evolved over the last, year, would you say? Would you say it's a lot more buttoned up and dialed now before, as opposed to what it was maybe a couple of years ago? Was there even a process formalized before? Can you maybe walk through that?
Yeah, I feel like when we first started out, or at least when I first started out working with our co-GPs and our fund of funds, that there wasn't really much of a process, at least that I was aware of. Like, I was doing more of the portal invitations and things like that, and I have someone else helping me now, and so I kind of oversee that process. But I feel like Rob would negotiate the terms and the amount, and then it just kind of would work somehow from there. And then, yeah, basically we realize that as we have more and more partners, it's really important to track, like, how much are they bringing, how much want to make sure that they're sending us the emails for approval, and as well as they're getting everything on the same page right from the beginning, like our minimum, if there's any sort of confusion, like getting everything on the same page we've just found to, like, really help. And so, yeah, I'm not really sure. Josh was doing that before I was part of the team, or before I was really doing investor relations stuff. So I don't really know what his process looked like, but I do know that this is still an ongoing process, and kind of more and more we think, like, oh, that should be part of the onboarding call. So it is definitely evolving and kind of becoming more robust as we're just becoming more experienced.
Absolutely. And it is something that will ever be changing. There's never a perfect way to do it. So that's why we have the checklist there, to make sure that we hit on the important points that we think. But if you are someone who's in the IR team or has any recommendations or suggestions, always feel free to be open to criticism or feedback or comments. So please email Dasha at lscre.com should you have any recommendations for best-in-class investor relation matters and onboarding processes. And if you're a fund manager or capital raising partner, if there's certain things that you like, let us know. But we like to really arm everyone with the best tool set possible to succeed in their raise endeavor. With that said, can you go through the deal timeline process, please? Can you discuss maybe, hey, we get a deal under LOI, we work at the PSA, kind of how we like to, equip everyone to succeed in their raising tranche for the amount of equity in their sliver that they want to raise. So can you maybe go through the timetable of that, please?
Yeah, so I would say, like, absolute minimum.
On a typical deal, not a PFC deal that may get, linger throughout the entire of 2023, right? But a normal market rate down the fairway opportunity.
Right. And even just a normal deal, not $100 million portfolio with a tax exemption structure on there,
Right.
there's still maybe some delays. And so, delays aside, it's at least 3 months, I would say, from the time we get awarded a deal to we're actually closing the deal. So I would say it's usually about a month from the time that we're awarded a deal that we actually launch the deal. So, we have time to do some due diligence and things like that, get legal started. So, actually create those manager, LP, and owner entities. And then also, of course, if we have TIC Tick investors, our timeline deadline is a little bit earlier because we do have to create that org chart and kind of get that all set up with our lenders. So as far as the timeline, yeah, we launch usually about a month after we get awarded a deal. And it's, really around that time that we launch a deal to all of our LP investors. We send out a mass email that we are also onboarding our co-GPs, reaching out to our fund of funds and all that sort of jazz. Also, I'd like to note that we usually reach out to those partners and JV equity, just kind of larger check writers before we launch the deal, because if we're going to have a JV partner that's taking up 80 to 90% of the check, we need to know that before we send out the deal to our investors, to our smaller investors.
Right.
And
Not
then,
that we don't love the big and small ones. We like it everywhere in between. So, there's always a portion and a sliver that is useful in our capital stack.
yes, we love to, we always try to allocate a certain amount, even if we have a larger check writer, to our retail investors. We always want to offer all of our deals. But as far as the timeline kind of goes throughout the raise, of course, if it's going to be around 3 months, we're launching around a month after the deal is awarded, then we're raising for those 2 months. We have the deal, the funding deadline, usually a couple weeks before we close. And so that just kind of ensures that we have the equity in, before we close. And so similar timeline for fund of fund and co-GP, they pretty much follow the same process as our retail/LP investors.
Nice. What do you think makes for the best partner? Outside of, hey, they bring us the best money with the best economic terms on our end, of course, that's nice. But, on all aspects of it, because there's the commitment amount to hit amount. We love the people that say they're going to raise $1 million. And then next thing you know, they say, hey, I'm so sorry. The $1 million is in, but I have another investor who wants to come into another $200,000. Is there room for the extra 200 grand? We obviously love that. We love to work with people that are very nice. We love to work with people that are responsive, but outside of those obvious things, and maybe you could hit on those more, but what is an ideal partner from your perspective? Because you're typically the one, after I kind of walk them through the deal, are the one that's corresponding with them, unless I'm calling them saying, hey, there's another delay to a massive closing that we have due to the city. So can you maybe, talk through, what you find to be the best and, what makes for the best capital raising partner if maybe you're an aspiring capital raiser?
Yeah, so I think you kind of encompassed a lot of what makes a good partner, but I would just like to harp on a little bit more about communication. So, communicating where you're at in the raise, if you think that there's a decent chance you're not going to come up with the amount that you committed to, that's totally fine. And it's often that happens, especially in this market. But letting us know is, super helpful and allows us to plan before, right before closing. So it puts us in a much better position to, even if you're saying I might still be able to raise the amount, but just, us to kind of still have our feelers out and come up with some plan Bs, especially if it's a sizable amount that you're projecting to not come up with. And then I also think that communication also goes to your investors. So if you're not on top of your investors, like a lot of the times they forget that they have some documents to sign. Like it's the best feeling when I have a co-GP specifically, when I am overseeing their investors coming into RLP, that like all of them have signed their documents, all of them have funded before the funding deadline. So it's not just communicating with us, but also communicating with their investors so that there aren't any delays. That also goes with fund to fund, right? Like usually they send one check. And so in theory, they're going to wait until all of their investors fund. So just being timely and also being on top of your investors, it's similar qualities, I think, that make a good partner in that way.
Nice. What are some things that we do as a firm that separate ourselves as far as processes, maybe communication, in your opinion?
Honestly, I wish that I had more insight on what other sponsors do with their co-GPs and their fund of fund partners. I actually want to make a point to ask some of our partners about what other things that they see, what they prefer. But
Right.
I don't know if this is unique, but about us. But I think what we do a really good job of is just trying to really be as flexible as possible. So, if you have your own portal, by all means use it. If you want us to communicate to your investors and have them on our distribution list, that's perfectly fine. If you want, it's like just all of the things, even if there's something that I haven't thought about, like we try our very hardest to kind of make this process work for you, because we do know it's sensitive and investor relations is super important. Yeah, so as far as, fund to fund, there's obviously more flexibility inherently on the fund manager's perspective because they get to choose what portal to use. They get to choose everything, really. But yeah, I would say that that's kind of the main thing that I'm proud of, and I think that makes us a good option to work with for these capital raisers.
Speaking of that, and what's getting you excited as we turn into the new year in 2024? Is there anything that you're going to do differently after, year of reflection and just getting better at your job going into, year 3 of your role? What does that look like for you?
Yeah, I think I'm really excited to take on more deal flow. So in 2022, we were pretty busy, and but I also wasn't overseeing as much of the process. So I wasn't the one, I was definitely busy, but I wasn't overseeing all of our investor relations and things like that. So although obviously it's going to be a challenge, we're projecting that there's going to be, a lot of juicy opportunities for us this year. We're definitely hoping, and we all think that that's going to be the case. So I'm just preparing for a busy, but also really kind of expansive year as far as processes. I think it's just going to make us better. And I'm excited to kind of work on delegating more and being able to take on more. So, yeah, I think kind of I have a virtual assistant that helps me with the investor services and just kind of giving her more of those things that don't necessarily take my input, and it's more repetitive tasks that she can do, and she's very competent. So just kind of working on that, and then also having the executive assistant just kind of seeing where she can also come in and help me so that we can take on more, because I know that we're definitely looking to do so.
Yeah, and I think 2023 was, of course, it was the big year where we took on and successfully put across the finish line a 9-figure acquisition, which is not a small feat at all. It took everyone, all hands on deck to accomplish that goal, which was amazing. But we also accomplished several refinances of a lot of our portfolio. So accomplishing that was an undertaking from a communication perspective. That was definitely a big, big, big step for us to stabilize much of the portfolio. Refinances that were not cash in or capital calls, but structuring the best strategy possible from an affordable plan. So that was really great. It falls in line with the Lone Star Way and what we like to do. But that was very much so a comprehensive feat. So I think moving forward, it's just going to be figuring out how we can, really grow the business, grow the firm, and acquire new deals, and not really be looking at the current portfolio to how to, maximize that, which is exciting. And of course, nothing's more important than taking care of what's in-house before we grow. We've done that. We've put the core and the skeleton together. Now it's hey, let's make this happen. Let's, buy more deals. Let's double down on what we're doing and really excel and progress.
Yeah. And then I also, this is maybe a little bit off topic, but we're looking to do a lot more in-person events. So I know that after we do our in-person summit in New York, we're all jazzed up, and we have a lot more, we've deepened relationships, we've maybe made new ones as well. And so yeah, I'm just excited to kind of double down on that. I think it's always fun, and it's a rewarding experience, because I do think people really enjoy these events, like from like genuinely like a fun and recreational standpoint, but also create deeper relationships. You create a level of trust that is very difficult to do over our marketing emails and things like that. So yeah, I mean, we're hosting one in the Bay Area soon, as you know, and I'm excited to reconnect with those investors, and I think it's always fun. So I'm looking forward to kind of working on bringing that out more, creating just more in-person events.
Yeah, no, I think there's no substitute for in-person interaction. Even as we get more digital as we get more tech dependent. The in-person interaction will really separate, groups. It'll separate our relationships and it'll elevate them. There's so many, incredible LP investors that we have in the Silicon Valley, which is where you're from, where I'm from. For those who don't know, Dasha and myself are from Menlo Park, Atherton area, which is basically smack dab between Palo Alto, smack dab between San Francisco and San Jose, right next to Palo Alto and Stanford, same city as Facebook, effectively. So that's where we're from, and we have some of the best investors there that we haven't really put that much time into in reference to, being there in person. Yes, we did, dinners there before, but this will be a different feel as we're having more of a formalized event and a gathering. So we're really thrilled, and this is also an idea by no one else but you. So I love the initiative that you've taken on that, and seeing you succeed and thrive with regards to the event. It's really fun to see your growth in that regard. So it's just been a pleasure to work with you to this point and connect. And obviously, it's fun having you as a guest on the show.
Yeah, thank you so much. And likewise, it's been great having someone to do the long list of calling and also brainstorming. It's nice to kind of have an IR team, and yeah, thank you so much for having me.
Absolutely. Final thoughts, final conversation point here. What are you looking most forward to in 2024?
Work-wise or just in general?
Anything. You can take it wherever you want.
I'm really looking forward to, I'm doing like a group trip with my friends in Colombia in March. I've never been to South America at all. So I've, a little bit nervous. But yeah, I'm very excited. I've heard great things. So I'm specifically excited for that trip.
So you just walked into something that now you have no choice but to answer. You just took a really fun, yeah, see, that's the look on their face. Exactly. You just took a very fun trip, which was well-deserved and earned following the successful Lone Star Summit in New York, the One World Trade Center. And if you're looking for more information on the 2024 event, I believe it's going to be in middle of September, if I'm not mistaken.
Yep.
So let us know if you have any questions regarding that. We'd love to have you there. But you just took a very, very fun trip to Asia. Now you have to talk us through what that looked like and what your highlight was and where you went.
Yeah, so I started my trip in Tokyo and then went on to South Korea. So the first 3 weeks or a little over 2 weeks was with my mom. So it's really special being able to go to Tokyo, South Korea, and then also a week in Bali with my mom. And then I did the remaining 3 weeks by myself in Bali. So yeah, it was just a great experience. Bali was my favorite place out of the three. And I know that that's maybe a little bit unpopular of opinion because everyone loves Tokyo. I know you love Bali, but everyone loves Tokyo so much. I'm vegan, so I can't really eat that much in Tokyo, to be honest. And Bali's like a haven for people like me. So yeah, it was an amazing experience. It was definitely very interesting and challenging at times with the time change. It's a pretty serious time change. So I was waking up at 5 a.m. for most of my days there to get some work done, while it was still, some overlap with New York. But overall, I'm just feeling really grateful that I was able to, work remotely so far away and have this experience that I've always wanted to do. And do that while still working, and not like most of the people that I met were in Bali had like quit their jobs because they like couldn't take a break to do something like that. So, it was obviously better. It would be better if I didn't have to work for that month and a half, of course. But I'm still lucky that I was able to do that and to maintain my employment.
Absolutely. And it's funny for those who've never been to Asia. I try to explain it, but it's really hard to explain. You really are in a different world. And if you think the world's small, please go to, Asia, not Europe, but Asia. And, you could probably even speak more to it if you go to Africa or maybe South America. I haven't been to South America and I haven't been to Africa yet, but it really makes you realize how many people are out there. And, frankly, how fortunate we are to live in America. Naturally, being in Korea and Japan are two very, very developed and incredible societies, cultures, and countries. And then Bali, of course, is, different feel than all of those in Indonesia, naturally. But so happy that you had a great trip. Any final thoughts for the audience prior to wrapping up the show?
No, I actually just want to hear what you're excited about for 2024.
Okay, well, many things I'm excited for. I think one, we are positioned very well to acquire a bunch of multifamily assets. And I think we can really look forward. I think the deals that we buy in 2024 are going to have, unique components and aspects to it due to the discounted market, what's going on with kind of the debt world. So I think that'll be very interesting to see how that unfolds. I think there'll be a little bit of chaos, which is, I'm not going to say I'm excited for that, but with the presidential election in 2024, that always makes for an interesting year. I think rates are going to get cut and or will stabilize. So that's exciting. So, more certainty in that regard creates more transaction volume. So I would say those are the items that I'm excited about. On a personal level, definitely am looking to double down on the fitness world, as well as I'm just, in a nice groove and routine of that. So those are, I would say, the biggest aspects. And of course, most importantly, two of my brothers actually got engaged in 2024 or 2023, excuse me, one in May, I believe, or June, and then one also, or maybe July, and then one in October. So I believe there'll be some weddings, and I could be an uncle here coming up in the next couple of years, which is very exciting. I think one of my brothers, I'm not going to say his name, is probably closer being on the clock than the other one, and having a kid soon. So that gets me really excited. So that's what 2024, what gets me excited in 2024.
Oh, that is very exciting. Didn't know that.
Yeah. So with that said, if you're looking to reach out to Dasha or connect with her anywhere, where can people find you?
You can email me at Dasha, DASHA at LSCRE. I think that's probably the best way to find me.
And if you're a fund manager, capital raising partner, co-GP, where can they find us?
They can find us at ir@lscre.com.
Or you can email me directly, craig@lscre.com. For any questions you may have about our process, the onboarding side, you can feel free to reach out to either of us. We'd happily take care of you. We're looking for to work with more partners and to grow our brand, our pool and rotation of partners. As you mentioned, we want to have a great Rolodex of people we've never worked with before, consistent partners, and referrals. So please think of us if you're looking to make any multifamily acquisitions. And this year, 2024 and beyond. Thank you so much for listening, and we'll catch you next time on the Fun Friday show.
Thank you.